Hi guys, welcome back to my channel. My name is Anastasia. Here we talk about investing and especially investing for beginners. In today's video, I would like to share with you my favorite quotes that were said by very famous investors, people who were very close to investing or were investing themselves and who made a big fortune out of investing and who really know what they're talking about. I think it's important to know these quotes, and I will also share with you my opinion and my thoughts on them because I think they are quite motivating and they're also very educative. So for beginner investors, it's very important to know them to understand the market better. And also for me, since the moment when I started investing, when I go through a difficult period and I don't know whether I'm doing right or wrong choices or I don't know what choice to make, I tend to remember these phrases and they kind of help me to get through it. So I also hope that you will find this information interesting and useful, and if so, please click the like button below and also subscribe to my channel if you want to see more of videos like that. If you have any thoughts or comments or ideas, or maybe you know other quotes that you like as well, please write them in the comments to this video. I will be very glad to see your comments there. So here we go. We start with the first quote that belongs to Warren Buffett. I think everybody who is just a little bit to invest in knows who Warren Buffett is, and if you don't know who he is, I think you should go and Google about this guy because this is probably one of the most popular and famous investor of the 20th century. He's the guy who made lots of money just off investing. He is definitely the most famous one. And he said these very wise words. I will tell you how to become rich. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful. I couldn't agree with this comment any more than what I do. Especially my favorite part here is to be fearful when others are greedy and be greedy when everybody else is fearful. I mean, it seems like it's such a clear idea. Everybody understands that before you start investing, you know that you should buy the dips. When the market is red, this is probably a good time to buy, and when the market is green, it's probably a good time to wait. And you should never buy all-time highs and all that kind of theory. We all know that. Well, I knew that before I started, but it took me several months to actually learn it, that every time when I see an all-time high, I know that the time when the price falls will definitely come. I may have to wait, but the problem that I had was the fear to miss on the opportunity, and I thought that this opportunity will never come. Well, now I know that opportunities come all the time, but I'm talking about the time when I was young and inexperienced. So I made this mistake and I just followed the general hype when people were buying something, and I wanted to get into this last carriage of that train, and I bought shares of different companies when they were at their all-time highs. If we look at my portfolio nowadays, the shares that I lost money on were all bought during the hype when everybody was talking about them, and when I decided that I'm just as clever as everybody else and I'm not late, so I decided to get into the train and buy the same shares. So this theory of collecting thinking definitely exists, and if you see that other people are doing something, you do the same thing, and it's very hard to go against it. Whilst what Warren Buffett tells us in his quote is when everybody else buys a certain stock, that's probably a good time to sell that stock, not to buy it. And vice versa, when everybody else sells the stock, it's probably a good time to buy, but it's much easier said than done. In other words, try to imagine that everybody else is selling Bitcoin and this is the time when you're buying it. It's not that easy. The second quote that I really like belongs to Robert Allen. He's an American businessman. He also used to be a member of the US House of Representatives. He said the following words. How many millionaires do you know who have become wealthy by investing in savings accounts? I rest my case. Thank you very much, Robert, on reminding us that it doesn't make any sense to keep our money in the bank, even in savings accounts, but the truth is nowadays banks do their best to remind it to us anyway, because look at the ridiculous interest rates that we get there on our savings accounts. I mean, in some countries their interest rates are even negative, so the banks, it feels like they are just telling us, go, take your money and invest your money somewhere else, because there's no point whatsoever to keep your money with us. And the bad interest rates, or something that looks as a bad interest rate from the first side, like here in England where you get 0.5%, on your several year savings account is not actually that bad, but it works for any country. If you're watching me from somewhere in Latin America where the economical situation is bad, or if you're watching me from Russia or Ukraine, I'm Ukrainian myself, so I know what I'm talking about. The economy of Ukraine is bad, and you can get a very high interest rate on your savings accounts in the Ukrainian banks. Some banks give you an interest rate of 15-16% per year. But don't get fooled by it, because from the first sight, yeah, you're making money on your savings, but when you calculate your inflation that is very high in not stable countries, plus on top of that, if you calculate how your currency devaluates against the US dollar, you understand that you are losing money anyway. The banks are not full, and they will also put the interest rate so that it seems like you're making a little bit of money, well in fact you're most probably losing money. Let's go to the next quote, and it belongs to Sir John Templeton. He is the guy who got to $1 billion by investing into a mutual fund, and he was always relying on how the stocks performed in the past rather than trying to predict their performance in the future. He said the following words: "The 4 most dangerous words in investing are, this time it's different." Obviously, Sir John Templeton didn't say it in 2020 when the pandemic happened and the market got so completely unpredictable. Because in 2020 you could actually say, well, this time it's different. Because nothing like that has ever happened before. Now we're in 2021, kind of past pandemic, obviously still in it, but hopefully at the end. And this is the time when no one can really predict the future, because we are at the beginning of something completely new, where new stocks have risen and the other stocks that have always performed very stable have fallen massively. Look at oil, for example. But in my opinion, it's a very good quote, because every time you think to yourself, this time it's different, you should definitely try to justify it in your head why this time is different. Why do you think so? And I'm pretty sure that in 99% of the time, this time is not different at all. Now, the next quote belongs to Warren Buffett again. In general, Warren Buffett said a lot of interesting quotes and interesting things about investing, and I definitely recommend you to read about him, read his books, or at least read about him on Google. So he said the following words: "Wide diversification is only required when investors do not understand what they are doing." I read Warren Buffett's book, and he says in it that before he decides to invest into a company, he does a lot of due diligence. He spends hours and days and months and sometimes years making his research. But when he finds the company, he's 100% sure that this company has a potential, and he invests a lot of money into one company. This is his approach, and it worked for him. Well done. He knows what he's doing, and he is probably the best expert in the world. If you are not as good as Warren Buffett, well, just a little bit worse than Warren Buffett, then probably diversification is your best shot. I'm using the strategy of diversification for myself because I don't feel that I'm confident enough or strong enough in any sector, any particular sector of the market. But if you look at people who I copy on eToro, all of them are specializing in a certain sector of economy. For example, look at Jay Nemesis. Jay is a definite tech nerd. He knows everything about technology, he knows everything about cryptocurrencies. This is his sphere, this is the part of the market that he feels comfortable in. Look at Olivier Danval. He is the currency guy. He knows everything about Forex, he knows about these different pairs, and this is the stuff that he's trading. He doesn't invest into cryptocurrencies because I think he doesn't know much about it. That's why he doesn't feel confident in it. These guys have 100% of their capital in a certain sector. If you are a little bit worse than them, or you just don't feel comfortable enough investing into the same sector, then what's the problem with diversification? Warren Buffett says that only people who don't know what they're doing diversify. Okay, I don't know what I'm doing, that's why I'm diversifying. But at least I'm not stupid enough to think that I'm an expert in a certain sector, and I'm not an idiot to put all my money into that sector and then lose all of my money because I was wrong. So thank you, Warren, for saying that, and thank you for reminding me that what I'm doing is actually right. The last quote that I would like to share with you today belongs to John Bogle, and John Bogle is the founder of the Vanguard group. Vanguard is a very good platform for beginner investors. I invest there myself, and this is the platform where I hold my ISA account. If you want to know more about Vanguard and if you want to watch my profile review there, I will attach the links below in the description box to this video. Generally, John Bogle is a very famous guy in the investing world as well. What John said was, if you have trouble imagining a 20% loss in the stock market, you shouldn't be in stocks. Well, John, what do you know about the pain of seeing the graph going down if you never invested into Bitcoin? And especially if you invested into Bitcoin about 5 years ago, where you saw the graph going from 2,000 to 20,000 within several months, and then it going back to 2,000 within the next several months. And you never got to sell your Bitcoin. Who did that? So this is something that I definitely don't have a problem with, because I always invest the money that I'm prepared to lose. When I see a 20% loss, I obviously don't like it, but I don't care about it that much because I know that I can afford to wait and I can afford to lose 20% of my money. I even can afford to lose more, but it doesn't mean that I want to. So these are my 5 favorite quotes for today. I hope you guys enjoyed it. If you liked this video, again, please click the like button below. It helps me a lot. It motivates me a lot to see your comments, to see your likes. For today, that's it. Thank you very much for watching this video to the end, and bye bye.